Well, good morning, everyone. Welcome to our Friday morning trading room. Hang on here a second. I'm struggling with the screen share. Come on, get the screen share going. So it's Friday. I forget, however, whether we were doing a rabbit hole this Friday or whether we were trading this Friday. We're kind of alternating a little bit here week to week. I guess what we could do is we could start off, see if the market's doing anything, and if it seems to be in a bit of a sideways twist, well, we can do a rabbit hole thingy of sorts. Here is your daily NASDAQ chart. Now, I'm a big fan of taking an overview of the marketplace. I think it's helpful to know the general overall trend and where you are relative to previous prices. And since the NASDAQ is kind of my pet market, looking at the daily or even an hourly will give you a pretty good perspective. As a day trader, I'm not sure that a weekly or yearly chart is that helpful, but certainly a daily chart. All right, you can see yesterday, the market did spend most of the day in a bit of a sideways funk and volume relatively strong. So to me, that suggests that there's a fair amount of selling going on because we had, relatively speaking, almost as much trading going on as the bar before it, and yet the bar before it was fairly strong, and here we have a bar that is fairly weak or neutral. Okay, so here we are, we're pushing the 8,000 zone on the NASDAQ. Bet you didn't think we'd be saying that a couple of months ago after the NASDAQ took a bit of a nosedive. This now the overnight for the NQ, and you can see not much. A decent swing higher and lower, but for the most part, yeah, we're just kind of sideways. All right, like I said, we'll give them a few minutes here, and if they don't start to behave, then maybe I'll show you something. So we can at least learn a little something. A little bit of a slow start here. Okay, the back and forth. I don't know. Are we still overtly bullish? Maybe. I'm thinking because of the overall uptrend. All right. Well, it looks like they're not doing a whole lot. So, excuse me. Why don't we do a little rabbit hole Friday today, and we'll try to learn a little something. Okay. All right. Probably one of the best, simplest, and most overlooked trading tools ever, drum roll please, is your trend line. Now, before everybody tunes out and goes and does somewhere else, hold on a second, let me explain. Your trend line is going to be one of your strongest trading tools because other traders actually pay attention to it. Now, I find using trend lines on a time-based chart very often a little bit more effective than trying to use it on your mean Renkos. You can use it on mean Renkos, and I will show you how here in a moment. But with the mean Renkos, because the mean Renkos respond a little bit more quickly, sometimes you end up with too many swing points for you to do your trend lines on versus a time-based chart. So many years ago when I was learning to trade, trend lines, of course, were the standby. They were the default position. And all the instructors and all the books I read would tell you about trend lines, and they would tell you that a trend line is, obviously you need at least 2 points to make a trend line. But after you have 3 points, you have a really solid trend line. Here's point 1. Here's point 2. I now have a really solid trend line. Are you sure? No, I don't. Okay, maybe that was a fluke. All right, there's point 1. There's point 2. I now have a really solid trend line. Oh, okay. No, I don't think so. So trying to trade trend lines according to the stuff that you read online or from these so-called experts sometimes can get you into a lot of trouble. Because as you can see here on the NASDAQ daily chart, and you can go on any chart you want, but trend lines or 3 bounces on a trend line are probably very, very rare. And the third bounce you should be very leery of, because in actual fact, it does seem as though the market will oftentimes break that third bounce, not honor it. So knowing this actually puts you in a stronger position. So you can ignore that stuff where they say 3 trend line bounces and the market, will keep going on and honoring the trend line. No, that's not the case. So you definitely need 2 points to draw a trend line. And this is where the tricky part in drawing trend lines comes about, because of course those 2 points are subjective. You can choose any 2 points you want. And that's not necessarily a bad thing. Let me show you why. All right, so let's say, let's say we're going to use this point right here. We're going to use something more recently, and forget the time frame. Forget that this is a daily. Like I said, this could be a 5-minute chart, a 15-minute chart, an hourly chart. This could be the NASDAQ. It could be the Euro US dollar pair. It could be Bitcoin. It really doesn't matter. Now, before I get into the first example here, what I find very often is that when a trend starts, you're going to have 2 bars like this, right? Down here we have 2 bars with a low and a higher low, low and a higher low. These are often very helpful for shooting that initial trend line, because you'll be surprised, or maybe you won't, at how often the market will actually honor that trend line. Well, it didn't do it down here so much, but let's try this one right here. There we go. Shot a little trend line off those 2 points, and look at where the market responded. So don't ignore those first couple of bars of the trend, because the market will remember that. Traders do pay attention to that. Okay, so there's tip number 1 when it comes to drawing your trend line. Tip number 2, when you have a reactionary point, don't ignore it. So we would roughly draw our trend line like this. Now, don't get too hung up on drawing the perfect trend line, because other traders will be struggling with the same thing. Remember, this line does not really exist. It's not really there. The sole purpose of the trend line is to highlight trend and where the market is likely to react. Just like my earlier example, where the market did not honor that third bounce, trend lines are made to be broken. There's going to be a point, there's a tipping point, where the sellers are going to overwhelm the buyers will overwhelm the sellers. That trend line is usually the line in the sand where this happens. All right, so if you've drawn yourself a trend line like this, you've got your 2 points, right? You got your point 1, you got your point 2, you've drawn your trend line. The market has broken the trend line. This is the cue for the buyers to step up. Why the buyers? Well, because we had a bullish trend line. This is your cue for the buyers to step up and rally the market. So knowing that, yes, this was a rather dramatic move lower, and there was a lot of selling going on here. But let's say this was a 5-minute chart instead of a daily chart. The opportunity is not as big in a 5-minute chart, right? The size of the bar, sure, you could make a couple $100 profit in there, but knowing the overall trend is up, you could be on the lookout for some bullishness to come back into the market, right? And this is your cue when that's going to happen. When that trend line breaks, you know you have to be on the alert for the buyers to do something. If the buyers try to rally the market and then fail, you know, they say they tried to rally it up here. You see you got 3 bullish bars, and now you're wondering, okay, maybe the buyers can't pull it together. Well, you can always throw your order to sell in here in case the market goes like that, right? But the important part is you know now when. You're not guessing. You know when is the time to step up. Okay. So is that a valid trend line? Yes, absolutely. Was this a valid trend line down here? Yes, absolutely. Now you can see that the initial trend line, the one we drew down here, is now honored. And the market comes up and it comes down and it breaches the trend line. Uh-oh. If you follow the traditional advice of the trend lines, that tells you that, oh, the trend line's broken, the market's going to become bearish at this point. Oh, really? No, it's not. Can you see how following all the free advice you get on the internet can lead you astray? It's almost as though the information, all the information out there is propaganda to mess up your trading. I don't know. Maybe I'm just getting cynical in my old age. Okay, so now we have a trend line like this, right? So every time the trend line breaches, we can adjust the trend line. Eventually what's going to happen is you're going to end up with a trend line that starts to get very, very shallow. And by this stage, you're going to be wondering whether you're in a trend or whether you're in a sideways range. Chances are you're going to be developing in a sideways range, and chances are somewhere in there you're going to get your test of the extreme, and then the market's going to try to go the other way. It's just the life cycle of a market. Okay, so knowing this little breakout scenario can be very helpful in timing our trades. Let's say we're going to go here to our 5-minute chart. And this was yesterday afternoon. The market took a bit of a nosedive. Now you can draw several trend lines on this. You can draw a trend line like that. And you'll notice that broken trend lines are honored in the breach. Right, so what used to be or should have been a resistance trend line is now honored as a support trend line. But the trend lines I like to draw are when the market takes off like this or like this. You can draw your little mini trend line. And the whole point of drawing the mini trend line is to help with your timing. Now again, notice I'm not micromanaging my trend line. I'm just kind of drawing it as it suits my eye. And what you're going to look for now is you're going to look for that breach. And a lot of times you can eyeball this too, right? You can eyeball the breach, and then you look for evidence that the sellers are going to try to take the market back. Here's your bullish trend line, and you look for the breach, you look for evidence that the buyers are going to take the market back. What evidence is that? Well, let's take a look here. This is the current market. This is where we are. We are in rally mode. Somewhere through here, we're going to get a breach. Might be coming up now, actually. Are we? Oh, yeah, we're approaching the top of the hour. So that breach may well develop into, say, a pullback here on the Raptor, a hard edge bounce, a number 3 signal. Well, that's the kind of confirmation that we want to see to tell us that the market may be ready to pick up the rally. Here it happened down here as well. See, we had a bear breach, and then the buyers came back, and the market rallied through the overnight. Here was a bullish breach. The sellers came back. So once you get the bullish breach of a bear trend, an obviously strong bear trend, you can look for those sell signals on your tools. And that can help with your timing. Look, we had a very nice progression lower. Here, the breach, we had a nice progression higher. We're going to get a breach here shortly, and that will also give us a clue when we might look for a better buying opportunity versus just going willy-nilly with our tools and saying, oh, well, here, let's do it on the hawk. We got loads of signals here on the hawk. I'll just buy this one up here. No. This is how some of those 4 arrow consolidations, macro pullback signals, this is why they are reliable as well, because they end up doing that little trend line breach and then recovering. All right, let's go back here to the daily chart for a moment. Another thing you can do with your trend lines is, and this is very helpful, is you can move your trend lines to the opposite side of where you've drawn them. And you're going to find that sometimes you get these very nice channels forming with the market actually honoring the top and bottom ends of the trading channel. Now, this can be very useful information in a couple of ways. First off, it makes it a lot more obvious when the market is not getting to the top end of the channel anymore. It starts to show us that the market is losing its momentum. And in actual fact, a lot of traders will even draw a top trend line based on a couple of points. In this case, you can see we've actually produced a very nice wedge formation. This one's probably going to show up in a textbook somewhere. Notice that on the third bounce again is when the market responds. You need those 2 lines to draw your trend line, and then it seems like that third bounce or that third intersection is when the market has to decide, what are we going to do? Are we going to go higher? Are we going to go lower? What are we going to do? This again can be very helpful in timing your trades. If you have the nerve to do counter trend positions, what better place to do it than on the opposite end of your trading channel? Like I said, this takes a little bit of nerve, but there's a lot of traders that do that. So here we are with our NASDAQ, and just eyeballing here, we could probably say, all right, if the market continues higher from here, we're probably going to be somewhere around 8250, maybe 8300 by the time we intersect the top end of this trading channel. don't be surprised to see a reaction there. In fact, you can make a little note on your calendar. Eric said, if the NQ gets up around 8,300, we're going to see a little bit of a bearish reaction. Of course, we have to deal with the level at 8,000 first, but this is how traders look at these things. Another useful reason for drawing the other end of your trading channel, and what you saw me do is I'll typically draw the natural side. So in an uptrend, I'll draw the bottom and then transfer it over. In a downtrend, I'll draw the top and transfer it over. Now, unfortunately, the NASDAQ did not show it here, but let me show you what normally happens before the reversal. What normally happens is that the market will actually drift through the trend line, the bottom end of the trend line in a downtrend, the top end of the trend line in an uptrend. Now, you would assume that a breach like that would make the market more bearish, wouldn't you? You would think, oh, look, we've broken the bottom end of the trading channel. The market has now become more bearish, and you would be wrong. Very often, and I'll leave it to you to go through your charts and find it for yourself, but very often when you get that breakout, it's going to be more of an exhaustion move than a breakout move. And within a few bars, you'll normally see a reverse, and very often you'll see a trend change at that point as well. Not only will the market go to the other end of the trading channel, but it will completely reverse the trend and start heading the opposite direction. So there's another clue when you can start to become more contrarian in taking your signals. See if I can find you an example here. Oh, well, here we go. Didn't have to look too far. Okay, now note well, first I'll try not to confuse you with too many things here. Okay, so here's the breach. And yes, it was a strong move lower. There was certainly profit to be made, no doubt about it. But look at what happened afterwards. Within one bar, we recovered the two prior bars. And yeah, we hit a little bit of a sideways mess, but it eventually led to a trend reversal. And you could have seen it coming. You could have seen it coming a mile off. Note the steepness of the trend line, or rather how shallow the trend line is. That is another indication that the trend is weakening and susceptible to a reversal. If you're looking, once again here, we'll go to the faster chart. Say we'll look at a 5-minute. Okay, here we go. We've got our little trend line. Now, again, you can draw it a couple of ways. If you want to use the first two bars, you can draw it like this. You can draw it a little bit steeper like this. We've now got the breach, right? We've got our trend line breach. We want to see this pullback a little bit steeper rather than shallow. And it's for the same reason that I just showed you on the daily chart. A steeper pullback is more inclined to continue with trend. So here's a nice little pullback, relatively steep. The market continues with trend. Little pullback, relatively steep, market continues with trend. Little pullback, again, relatively steep. The market tries to continue with trend versus how it ended up doing a pullback. I'm not sure how you want to draw the lines there. Maybe we'll go with that one right there. But you can see it struggled, and all of a sudden we get a more shallow pullback. Yeah, it tried to go higher, but then it also reversed on itself and went lower. Okay, so here we are now with our NQ. We got our trend line breach, and look at that, right on time. We're getting our buying attempt showing up. So, and lo and behold, we're into the hard edge, so that means we're going to get a number 3 signal or some sort of signal off of the Raptor. How is the Hawk doing? No, the Hawk's already flipped over. The Eagle will also be on the hard edge, so we're going to get an Eagle signal. I do not want to see this trend line get too flat. And if it gets too flat like this, we're more susceptible to a reversal. And so now our patience, hopefully, will be rewarded as we look for a buy signal to develop. So the Raptor now going to give us our cue when the moment is right. There's the buy signal. I'll throw the order in, maybe snuggle it up a little. Get this out of the way for now. All right, so we're in at 94. We can get out at 49. Or sorry, we're in at 44. Can get out at 49. Darn dyslexia. Roll our stops up again a little bit. It would be a little bit more reliable if I wait for this bar to complete, but you know, we've got the trend line breach. There should be some bullish pushback. Okay, anytime now, there should be some bullish pushback. Get going. Trying to make a point here. Okay, class. What would happen if the market does not rally at this point? Anybody? Everybody waiting for me to give you the answers? I guess so. Well, we've just seen the trend line breach, right? We know the market should recover. Well, if the market does not recover, it has to go the other way, doesn't it? We are watching, we are witnessing right now the buyers attempting to rally the market up. We're on board with the buyers. Let's go, buyers. But if they fail to rally the market up, well, then the buyers are not in control, are they? So you could actually double down here on your trade, and you could insert an order to sell, and you could, like I say, double down on that position, one to offset your loss and the other to actually earn you some profit. All right, come on, give me one more bullish bar here and I can roll my stops up. I would like to actually see the market take out this high. That would be a good cue to roll up my stop or get closer to that high anyway. Yeah, all right, there we go. They're moving a little bit sluggishly here this morning, so I'd better not press my luck too much. All right, well, let's cancel that order. So I got a break-even tap out, and now I have a pretty good idea which way the market is likely to go if it breaks the lows, don't I? I have a pretty good idea that the market will have to head lower from here. So I can throw in my profit orders, and this will develop into a test of the extreme. I won't do my stop loss order just yet. We'll go back here and we'll talk a little bit more about trend lines. So that was a very good bullish bar. The volume not really corresponding to the size of that bar, is it? The volume seems a little bit light. Look at the bull bar here a little bit earlier. That was much stronger. Well, maybe we will see a reversal. Now, once trend lines are violated, I tend to remove them. So, I don't draw a trend line like that and then have a trend line like this. And then when that one gets breached, have another trend line like that. Things get a little bit too confusing. So I'll remove the ones that have been breached. And well, now we're in a little bit of a waiting game, that's all. If the market, like I said, if the buyers can't recover the next trend line breach, then we are very likely to see a reverse. People always used to write me when I was doing my nightly market updates, and if they didn't trust my advice and the market exploded, they would always write me and say, "Oh, Eric, I missed the move. Is it too late to get in?" Well, yes and no. If the market's exploding higher or lower, go ahead, just get on board. The problem is not the direction. The problem is the stop placement, right? And where in the world are you going to place your stop loss? If you're entering down here, yeah, in hindsight, you can put your stop loss right here, but in actual fact, the correct place for the stop loss is right there. So trend, I used to tell them wait, and then I would wait for a trend line breach, and then I would tell them, okay, now you can look to sell again. And it looks like on my trade, I got a little bit too quick with my stop again. Aw, it did work out. The market getting up at least to my profit objective. Darn it. Well, we can still leave that order in because the premise is the same. If the market breaches at this point, the lows, I mean, it should head lower. Ooh, and look at this. I was just going to point this out here, and we're getting a very nice reaction. There's 0.1, there's 0.2, there's 0.3. Look at what's happening at 0.3. And we got the breakout above. Everybody's thinking, oh boy, look at this. Look how bullish we are. No, you're not. Okay, so we can adjust the trend line a little bit. This is the wake-up call now for the buyers. Seeing the buyers get all excited because their trend line has been violated. And so we can adjust our trade accordingly. We have a number 2 signal here. It's not printing as a number 2 because we actually made a little bit of a higher high. But let's see if we get a second push opportunity here. If we get this bar bouncing up a little, we'll have a clue as to where to place our entry. And that should translate into a trend change signal on the Falcon. Oh, come on, you guys. I'm trying to show stuff. All right, well, I guess I better get my stop loss order in. This is going to bounce around a little bit. We're going to get an early trend change signal. We're going to get an early number 1 signal. Could have held out for that as well. But you can see how by following your trend lines, you could have actually taken advantage of that number 2 signal a little bit earlier. Come on, don't stall now. All right, so here comes that early number 1 signal. As we get that little clouds crossing over, the little bit of a pullback, and now the market should try to continue with trend. I got a real struggle going on at this point. Looking for an opportunity to bring my stops in now. And looking for that number 1 signal to form, which it should form pretty close to where I entered. Come on, give me a couple of bear bars and I'll start to snuggle my stops up. Stinkers. Come on. All right, what's going on here with our trend lines? Okay, another little bit of a trend line reaction perhaps. Notice how we're starting to get a little bit more shallow with each trend line. And that again suggests that the market's going to enter a bit of a sideways trading range. So that one's been breached. I can take that one away. So we'll see if we get a little bit of a bull breach here. That should entice the sellers to wake up and do something about that. Let's see how our trade is doing. Okay, well, we're making some progress. I'll bring my stops in a little bit. And if we can get about halfways, there we go. I'll take the trade to break even. There we go. 3/4 of the way, and whew, that was tough. All right. Well, had I not been quite so quick with my first stop, that one would have worked out quite nicely. And of course, the second trade working out here. And the trend lines giving us a little bit of a clue when might be a good time to get on board. Ooh, notice the volume up a little bit there. So volume up on this tiny little bar, that should alert you to a possible reverse. And then volume up on this rather bearish bar, which would suggest more selling than buying. But again, we're not 100% at this point. All right, so what would I be looking for now? What would I be looking for to happen next? If you say, wait for my wife to bring me a cup of coffee, you would be wrong. I would be waiting a long time. Yeah, way to go, Ray. Ray said we'd be looking for it to go up. So we'd be looking for it to go up and breach the trend line. What would we be looking for after the trend line breach? Would we be looking for an opportunity to buy or an opportunity to sell? Yeah, good for you, Ray. Ray says we'd be looking for an opportunity to short it. Ray gets the gold star today. So until that breach happens, and you see that we're kind of struggling here a little bit, the buyers know what's going on. They know the sellers are trying to run the market down. So we're going to get, we're getting some signals here and there. Got a nice little trend change signal here that actually coming down and finding its profit objective already. But we may have a few other signals going back and forth here. The macro pullback signal, so the hawk's starting to look a little bit more bullish or bearish, pardon me. But once we get that breach, we can improve our timing a little bit. It's not to say these other signals aren't valid. Like if we get a number one signal here on the Raptor, yeah, okay, it might be a little bit of a nail biter, but we know the number one signal is a solid signal for the Raptor. Again, I don't think direction so much an issue at this point as stop placement, which is why I would prefer to see a little bit of a rally, a breach of that trend line, which we could draw something like this. Oh, no, I guess not. Be a little bit more like that. A breach of that trend line, and then evidence that the market will head lower, either via that number one signal or a number three signal. And our timing could be much improved by waiting for that trend line break. So you can see the difficulty with using a range style bar is you can draw too many trend lines because there's all these little mini reactions that occur, which is one reason I prefer to stay on a time-based chart for drawing my trend lines. But if you're going to draw them on your mean Renko chart, I think you do all right if you keep a broader perspective, right? So maybe drawing them on the eagle is more useful. And you can see on the eagle, you can get 3 bounces. 1, 2, 3. 1, 2, 3, and it is honored. That is less likely to happen on the time-based chart, as you have seen. Now, you may see just the slightest little breach of the trend line here. I try not to micromanage the trend lines. You know, you can't put these things under a microscope. I want to see an obvious breach, as does just about every other trader who is watching the market right now. One concern is if the trend line is shallowing like this, we may get that sideways range going on before we get the big move lower. But that's all right. We're looking at working on our timing at this stage. It would be very nice to see this bar finish green. That would kind of confirm the breach of my mini trend line. Okay, well, there we go. We got the number one signal, and we know the trend is down. So we could use this as our, just in case the market explodes to the downside and keeps honoring the trend line order. Right, so here we are, we're still trending lower. So we shorted. I'll roll the stops just a little bit, give them a little bit of room above here and above the median line. Come on. You can do it. These are some very familiar numbers for this market. We've spent a fair amount of time the last few days around the 79.30 area. Oh, come on. All right, another situation, if we can get this trade about halfways, come on, there we go. All right, I'll take it to break even at this point. And maybe, oh, don't flinch, not yet. Come on, one more push lower, you can do it. A little bit of a early reaction, I think, to 79.25, which would be one of those psychological numbers. Or, as we like to abbreviate it in the trading biz, a psycho number. Oh, they're going to tag me at break even again. Come on, play nice. Oh, well. Just not enough momentum going on today, but you get the idea. All right, gang. I'm going to have to close up shop here a little bit early. Like I said, this week, I've got some out of office commitments I need to get to. Right, well, if you're going to hang out with the market here some, it looks as though, well, we're going to get that bullish pushback. Buyers have not left the building. In fact, you could say, well, the buyer's trend line was just breached. So we're going to get this market in a little bit of a twist very soon. So this is going to be the buyers coming back, in which case we can put our just in case order to sell down here because they're going to break our trend line higher. And then when we have our little bit of a bearish reaction, well, then we can place our just in case order to buy above that bullish reaction, and we'll have the market sandwiched, and it will have to decide which way it wants to go from there. All right, well, I hope you found that useful, and I will see you on Monday. Have yourselves a great weekend. I'll talk to you then. Bye for now.